Hi, Miss Afiza. I am Lim Xing Hui. My group and I would like to discuss on the impact of Budget 2020 for tax implication on individuals and business. The budget paper states that the government will improve the nation's taxation system by decreasing the tax gap, which is an estimate of the difference between the amount of the revenue authorities actually collect and what they would have collected if every taxpayer was fully compliant with tax laws, minimizing tax leakages, exploring new sources of revenue, and enhancing tax administration. Now, I would like to talk about the tax implication for individuals. The implications include income tax scale rates, homeowners, as well as parents and children. The first impact is income tax scale rates. The rates remain at 0% to 28% for the first RM2 million in chargeable income, and the tax bands remain unchanged. However, a substantial move was made. The resident individuals who have chargeable income exceeding RM2 million will be taxed at 30%. The fixed rate for non-resident individuals is accordingly increased to 30% from 28% to be on a balance with the top rate. Since it has been disclosed that 2,000 persons fall into this category of taxpayers, and that the 2% increase will bring in tax revenue of RM100 million. This works out to an average of RM50,000 from each of the 2,000 super taxpayers. The second one is for homeowners. This includes real property gains tax (RPGT) and stamp duty exemption for rent-to-own (RTO). The RPGT issue of zero rating was topmost on many people's minds. There was strong public opinion for the reinstatement of the zero rate for real properties held for more than 5 years. In the end, as a compromise, the Minister of Finance introduced a higher baseline as the deemed acquisition price. Thus, instead of the market value as at 1st January year 2000, the baseline has been moved to 1st January year 2013. A full 13 years later, this will substantially bring down the quantum chargeable to RPGT. The RTO scheme was introduced to help Malaysians obtain financing to their own homes. Stamp duty exemption will be put in place for the instruments relating to the first home under the RTO. The 50% remission in stamp duty for the transfer of properties between parents and children has been tweaked so that it is only applicable to citizens. The third one is for parents and children. The current tax relief for parents of RM6,000 for medical expenses related to serious disease has been broadened to include the cost of fertility treatment. This is timely and will help married couples realize their dream of parenthood. This is also in line with the current efforts to increase the population in view of the rapidly aging one in Malaysia. Then, the tax relief for childcare and kindergarten expenses has been increased from RM1,000 to RM2,000 in year 2020. This is totally welcome.
Hi Miss, I'm Tan Wen Yi. I'm going to talk about the impact of budget announcement on tax implication for individual. Let's begin. First, the exemption for yearly withdrawal reached before the age of 55 from a private retirement scheme has been extended to withdrawal for health care and housing. Then next is investing in REITs. Investors in real estate investment trusts will continue to enjoy the preferential 10% tax on the distribution received from REITs. The tax treatment has been extended until 2025. Then we come to donation. The threshold for approved cash donation has been standardized at 10% of aggregate income. This means individuals can donate up to 10% of their aggregate income and be eligible for a tax deduction. Now we come to the last one, which is tax rebate on departure levy for pilgrimage. The departure levy on an individual leaving Malaysia with effect from first day of September will be allowed as a tax rebate where the individual embarks on Umrah or religious pilgrimage, provided that it has been duly certified by the relevant religious body or committee.
Hi, I'm Sho Susan. Now I will explain the impact of budget announcement on tax implications for business. First, corporate income tax treatment for small and medium enterprise, we can call it SME. Previously, it is subject to income tax at the rate of 70% on the first 500,000 ringgit Malaysia of chargeable income. The remaining chargeable income is taxed at 24%. However, under Budget 2020, it is proposed that at the first chargeable income, which is subject to 70% concessionary income tax rate, be increased from 500,000 ringgit Malaysia to 600,000 ringgit Malaysia, and the above mentioned concessionary tax rate be given only to a company having an annual sales of not more than 50 million ringgit Malaysia. Next, capital allowances for small value assets. Under budget announcement, it came out with the qualifying expenditure of small value assets to be increased from 1,300 ringgit Malaysia to 2,000 ringgit Malaysia. The maximum limit of total qualifying expenditure in respect of such small value assets be increased from 13,000 ringgit Malaysia to 20,000 ringgit Malaysia each year of assessment. Let me cite an example. A person who incur qualifying expenditure on asset with individual value not exceeding 2,000 ringgit of Malaysia, it means that it is small value asset, in the basic period of year of assessments qualify for 100% capital allowance on that qualifying expenditure. The total qualifying expenditure in respect of such small value assets is limited to 20,000 ringgit of Malaysia in a year of assessment. However, such limitation does not apply to SME. Furthermore, tax treatment for expenses incurred on secretarial fee and tax filing fee. Normally, expenses incurred on secretarial fee and tax filing fee by taxpayer are allowed tax deductions for each year of assessments as follow. First, secretarial fee up to 5,000 ringgit Malaysia and tax filing fee up to 10,000 ringgit Malaysia. However, under the budget announcement, it proposed that the limit for tax deductions or expenses incurred on secretary fee and tax filing fee by taxpayer be combined and allow up to 50,000 ringgit Malaysia each year of assessment. Also, it's also announced that the tax deduction on cost of listing in Bursa Malaysia, in fact, expenses incurred for listing of a company in primary market, we can call it main board, assets certainty, efficiency, ACE, Markets and Leading Entrepreneur Accelerated Platform LEAP, market in Bursa Malaysia are not eligible for tax deductions. However, government now make decisions that tax deductions of up to 1.5 million ringgit Malaysia will be given to technology-based company and SME seeking to raise additional capital through listing in the ACE market or the LEAP lead market. The tax deduction is on the following listing costs. Number 1, fees to authorities. Number 2, professional fees. And lastly, underwriting, placement and brokerage fee. Now I will pass to my next member to explain further.
Hi, I'm Jiawei. Let's continue the tax implication of Budget 2020 on businesses. In order to increase the employability of local graduates through early exposure to the workplace, the Budget 2020 proposed that the existing incentive for structured internship program to be expanded to include all academic fields instead of hiring from engineering and technology field under the existing incentive.
The above incentive is subject to satisfaction of the following conditions, which are: students are Malaysian citizens, students must complete the approved internship program before the end of their final semester, minimum internship period of at least 10 weeks, and monthly allowance of at least 500 ringgit Malaysia for each student.
Also, to increase industrial forward-ready workforce, the period of double deduction on expenses incurred by companies that participate in National Drought Training Scheme for Industrial Forward Program will be extended to another 2 years, which is from 1st of January 2020 to 31st December 2021. Last but not least, as to encourage more employers to make PTPTN loan repayment on behalf of their employees, the Budget 2020 has proposed an extension of income tax deduction, which is from 1st January 2020 to 31st December 2021.
The deduction is subject to the following conditions, which are: the employer shall not impose any payment on the employee as a consideration for the payment of educational loan made by the employer to the PTPTN. The employer and the employee are not the same person. The employee is employed on a full-time basis, and the employee is not a relative of the employer.